All right. Good morning. Good morning. Good morning. Good morning, everyone. Good morning, everyone. Good morning, everyone. So you're having Mr. William Kwachi over here. Good morning, Mr. Williams. You're having Mr. Richard Anyimansa. Good morning. Good morning. Good morning. Good morning. So another day, another dollar to be made. Another day, another dollar. So yeah. So today is Friday, the last day of the trading week. Okay, so how has your week gone so far? Are you guys did you come out profitable this week or it was just a drawdown? How has the week been so far? How has the week been so far? Was it profitable or it was just a break even or you made some small money? How has it been so far? How has your week been so far? So kindly let me know how has the week been so far? How has the week been so far? Profitable. Okay. That's good. That's great. That's great. That's good. So trading itself is not something complicated. If it's the only thing that makes it difficult is the discipline part. But it's just simple. It is a simple thing to play. Just you wait for a retest or either breakout. That's the only thing that you'll be doing more often. So it is easy to print money from the market. It is easy, but mostly being patient and following your rules is a problem. Following your rules is a problem. So today is what NFP. So if you are not profitable this week, one thing you have to do. So I always say it's you become good at trading not when you are trading. You become good at trading when you become good at trading during the weekends. That is when you become good at. You don't become good at when you are executing trade and those things are just the back office or the work that you've done behind the scene. That is what you are executing at the real life or at the real market. But when it comes to for you to become good in trading or at trading, you need to during the weekends are the best times that you need to be putting in the work. So during the weekend, what you have to do is what all the trades that you took. If you had a winning trade, okay, I've always been emphasizing on this thing that the only thing that made me realize myself or realize what is working for me is the moment I started going back to my winning trade, started going back to my what losing trade, as in comparing those two things and seeing which one works best for me. I hope you people can hear me. Okay, I think this one. Can you hear me? Hello, can you hear me? Okay. Okay, you can hear me. All right. Yeah. So today is Friday. We need to. Okay. So today is Friday. We have to. Let's try and what? Just have a real talk, or just have a talk on how we can become good at this skill. Okay, because this skill, the kind of freedom it can give it to you. I know some people are already cashing out and other stuff. So how you can become good at this thing is by what? First of all, you need to have a lot of time for the chat time. You need to get enough chat time. That is when you are going to become good at this thing. It is not something hard, but if you dedicate a lot of time for this thing, it's with time. Give yourself like 3 to 4 months. With time you get to understand things, but don't expect it to get it upfront, because it needs a lot of experience at the initial stage. Without experience, if you don't have a track record. So I always say, after getting it, like, you need, for you to become very confident, to you need an additional 1 year. Go through the life cycle, one full life cycle of trading to get a history. So I always advise, you need to keep track of your trades, journal your trades. Okay, journal your trade. Every single trade that you take, have records of it. Okay, have records of it, so that when you are going back, you'll be able to track your performance, know what you are doing right, the winning trades, the losing trades. Then you justify, or you conclude on your what your strategy. Okay, so I got to realize my strategy when I did this thing, by going back to my trades, comparing the wins and the losses, and seeing which one is working best for me. That is what's made me like to discover my strategy. Oh, I noticed that, most of the times, if I do these things more often, this thing gives me results as compared to doing this thing. So I started doing the things that is giving me the results. As I started doing it, then I noticed that, oh, it is giving me results. And as time goes on, I still, so now I've found out one strategy, one killer strategy, that it is going to give, if it happens, it is going to give me $1 million. I'm going to go in high risks, especially with the trade that happened. I've seen that it's mostly play out. I was going back to my history, and I noticed that it's mostly play out, that break and retesting. You get it? That break and retest, it's my bread and butter trade. This trade. Okay, it's all about what? I discovered this thing by what? Going back to my trace. So it's, you need to have a lot of time, bro. You need to have a lot of time. So this break and retest, this is my bread and butter trade. This is my A plus setup. And last week, for instance, it happens a lot, and the chances of it playing out is like 98% more often. 98% more often, this system plays out a lot. So you can see break, retested. You see the bearish candle over here. So these setups really plays out, and anytime that I execute on these setups, it never fails. That is what I've noticed. Break and retest hasn't failed me before. The only trade that normally fails me is what? The breakouts. So maybe I'll be looking, so we have I'll be looking at how I'll be apportioning my risks. Maybe when I see a breakout trade, I'll be going in with less risks, but when it is break and retest, then I'll go in with 4 risks. Okay, so break and retest over here, you get it, it's played out. I've seen that break and retest, normally it's my bread and butter, and I need to pay critical attention to. Okay, so it's all about, so I was going through yesterday before I slept. I went through all my trades and noticed mostly that break and retest. So 9th uh 9th of April is the day that everything, my eyes open. 9th April, this trade, I'll always celebrate this day. I will always celebrate this day. This trade, you can see it over here, price broke out. This is the day that my eyes got open on what I'm doing in the market. This trade, now the moment I took this trade and I won, I just sat down and what did I do? This trade opened my eyes and everything. The clarity started coming. This 9th April, last year, 9th April, this trade exposed me. Like, this trade really, really did me good. This trade, 9th April, was it 10th or 9th? Okay, it was 10th April. 10th April. I have to celebrate, and my birthday too is on April. So I think I have to combine it and make it big. This trade, this setup on GBP USD, this trade setup is what changed everything. This trade turned everything around. That day, like, I just reflected on the trade I took, and I noticed that this break and retest. So it has been happening more often. Break, retest, trend continuation. So you see the pattern. Okay, so this was a bullish this thing pattern. So I will try and get you a bearish one too as well. So today is Friday. Okay, if you make money, if you have to make it before this day. Friday is not the time you have to chase, and today too is what, NFP week. So we are going to educate ourselves, and I think there was a trade opportunity to on gold, but we will just analyze gold too as well. I'm seeing a breakout entry on gold. I'm seeing a breakout entry on gold. A breakout setup rather on gold. Okay, so you have to be vigilant. If you become at the initial stage, don't be going in big. Just try to find yourself in the game, and after finding yourself, you go in big. Okay, I wanted to use this one to use this one. So guys, what I'm doing has not been coming easy. I've been putting in the work, and up to now I put in the work. So some people might think, oh, you just came. Nah, last night going through the chart to find out. I want to be good at this thing. That's when I'm called. Anytime I'm called upon, I can deliver. Okay, that's my goal every day, is to be good at what I do. Okay, so you can see it over here. Is it not the same pattern? So this pattern, let's compare this pattern to this one. So price broke out, made a red test, and trend continue. Okay, let me clear this one. Everything that you do it with all your heart, so that when you are called, when the opportunity comes, you are not going to fumble. So you can see, is it not the same thing? Break, retest, continuation, break, retest, continuation. Okay, so this is going to be my bread and butter setups, and when it happens, I can go in with huge, like, big risks. Okay, so you have to know your A setups. Okay, so this is the bearish one. Okay, so the other one was a bullish one, and this is the bearish one. So this one had a break, retested, trend continued. You get it? So you see this one too, and this one too. This trade too, I took it, but I wasn't paying attention to. So I've just noticed. So it was the same trade that we took this week that took us from the loss and brought us into what? It took. So it's the same thing over here. It's the same thing over here. You get it? I hope people are seeing it. It's the same thing over here. So the trade is still running. And one thing I've seen about break and retest, if you get a perfect entry on it, it normally runs a longer time. You get it? So it's still running. Okay, it's still running. So this is going to be my bread and butter trade. Like, when it happens, I'm just going to milk I'm going to milk it. Okay, I'm going to milk it. So this is the trade, the same trade setup we took this week. So we had the trade over here. Our stop loss was at the previous low of the candle, and we targeted the H daily zone, and we had like 1 to 3 risks to reward on this trade. Okay, but it has moved now. It has moved like what, 1 to 7. It has moved like 1 to 7. Okay, so before the Xmas 2, it was the same trade I was sending on USD card. Is the same trade that I sent. Okay, it was the same trade that I sent. So as I said, we are going to be taking trades an hour before the main session. So it's not 7 yet, 7 a.m. yet. Okay, so let's relax and you analyze gold too as well. So it was the same trade that I was sending. So it's the same thing that happened over here. Price broke out, made a red test, trend continue. So you can see the repetition of the pattern. I hope you can see it. This repetition of the pattern. See the repetition of the pattern. So price broke out, made a red test, trend continue. So you can see what's the difference between this pattern. Is it not the same pattern? You get it? It is the same pattern. So that break and retest, we need to keep an eye on. Okay, we need to keep an eye on. And why did it happen again? It's happening again too over here. Price broke out, made a retest. What happened? Trend continued. Okay, so it is not like as simple as I'm doing it. You need to factor many things into consideration, because you are seeing the same pattern over here. You need to first of all identify your various levels before you trade this pattern. You need to make sure there was a clean, or there was a clear traffic or clear zone. Looking at your left, plotting your support and resistance, is taking into consideration the time of the day. You can't just wake up and see price has made a break and retest, so you are going to execute. Sometimes you might be executing on a support level, or you might be taking it on a resistance level. So you need to pay attention to the various levels, okay, before you even take into consideration the break and retest. So you don't just wake up and just take because price has broken out. So you can, so you see similar thing happens over here. So why didn't I take this trade? It's because it didn't, all the criteria or all the factors wasn't as in alliance. That's why I didn't even take this trade. So there are a lot of things you factor into consideration before you take the break and retest. But after, what I'm talking about is after going through all the process, or after going through all the analysis, your confluences, this, when you get something of this sort, it's a trade setup that normally moves a lot. So that's what I'm talking about. It's a trade setup that normally moves a lot when you get it on the screen, when you get it on your chart. Okay, when you get it on the chart. So it's very, very important. So you have to first of all make sure you're having as in multiple time frames in your direction. Okay, so the daily H4 in the direction. So all these things that I'm talking about is based on my history. I notice what is working for me, taking into consideration like my 10 winning trades. What was the common things among all the things that I did? And I noticed that, oh, maybe the daily and H4, mostly when they are in the same direction, it normally moves well in my favor, considering the clean traffic, considering what the time of the day, the sessions, the time you need to execute, and those stuff. Factoring. So there are a lot of things that goes into trading. Okay, so you don't just see a pattern. Maybe the person is saying head and shoulder, so you just, the moment you see head and shoulder, then you execute. There are a lot of things that you are going to factor into consideration before you execute the head and shoulder. If maybe there was maybe like, there are a lot of things. There are a lot of, when it comes to the section, you pay attention to the sections, the psychological levels or the support and resistance levels. You pay attention to them. You get it? Before the market structure, the trend. Okay, is the market in what, an uptrend or what, a downtrend? You factor all these things into consideration before you make a decision. So you don't just wake up and just take a pattern, maybe just break and retest, maybe neck and shoulder, or whatever they call it. So pay attention to the factors before you execute. So when you move to USD CHF2, you can see most of the times the patterns repeat the same pattern. So you see, yesterday evening around 12 a.m. I was doing this back testing. You get it, seeing the common things among them. So I noticed that it was playing out. So all these things happened last week. I think this one, so this one was what time was this? Around 30th December. This one was what, 2nd January. Okay, and this one was the same 2nd January, but around the, and this one is 3rd January, around the New York session. It played out. You get it? So it has been, the break and retest is a powerful this thing. If you are going to the most of times to, the only problem is you are not going to be patient to wait for these things. That is the only problem that most of times you face. Okay, we are going to be taking the stupid trades, and when the time for us to execute, when the like better trades comes, then we've already what exhausted our bullets for the better trade, and we can't even execute. So it has been playing out, and it's played out too over here. It's played out. So if you look at this one broke out, came down, created this one over here. What happened? It continued. Okay. And this one, so this one was a minor break and retest. So I think this one was the time I started executing on USD CHF. This one broke out, made a minor pullback, and what happened? Trend continue. Okay, trend continues. So and sometimes, I'm not saying it happens. When it happens, it's going to play out every day. It's going to play out, but majority of the time, because I think we had one over here which failed, but I think this trade was because of a news event during that time. It was a minor news event during that time which I didn't pay attention to, so that's why it's even failed. But later during the New York session, it's moved in our favor. You get it? And if you look back, you can see it has been playing out more often. So this one was during news hour, but it played out. It happens to be what a breakout entry. Okay, so you need to understand the various trading rules, or the various trading styles, as in how the market moves, how the market ticks. So it's either going to break out or it's either going to pull back. It's very simple. Okay, so the market trends, it moves higher highs and higher lows. Okay, highest highs and higher low. So the market is either going to what? Rate test. Okay, it's either going to rate test the previous support or a resistance. This one, before it broke out, it was what? A resistance, and the moment it broke out, it became what? A support. So the market is either going to what? Make a break and retest on the previous what? Resistance, now tend to support, or it's either going to what? Make a breakout. Okay, it's either going to make a breakout. And one thing too I'm going to talk about is what? The considering the time frames. The time frames you are going to be executing this pattern, or the time frame that you're going to executing this thing that I'm talking about is what? You need to factor into consideration the time frame too. This thing is not going to work on all the time frames. Okay, so this one, for instance, you were having multiple trade confirmation over here. Price broke out, made a retested on this previous resistance, now tend to support. Trend line 2 is aligning with the same thing. You get the trend line 2 is aligning with this one too as well. So you can even bring this one. So there was a shift in structure over here. So I think we can have it at this point, and what? So you can see the trend line is aligning with where price got retested. So we're having multiple confluences over here. Price took off. You get it? Multiple confluences and price took off. So it's kind of, it's normally plays out when you see it on the charts. Okay, it normally plays out when you see it on the chart. So gold is already taking off. And one thing I don't like about this times is I wish like we are in March, because this times the reason is what? Daylight savings. If you are waiting for an hour for the candle, for an hour for the lending to execute, as in an hour before the main active session, like the lending session to happen before you execute, normally you miss out trades, because it's 7 o'clock before trade will move and other stuff, even though the time has been moved to it has been moved ahead an hour, but mostly we miss out a lot of trades. So I've missed the time that pre-lending start at 7 o'clock, which is going to be around March. That is when the pre-lending is going to start at 7 o'clock. So I wish you are in that time, because this time is normally waiting at 7 o'clock before you execute trades. You miss a lot of trades. So this breakout on gold like this, you see it is happening. Okay, so imagine, or suppose maybe if it's at 6 o'clock, you would have even taken this trade before it will even start, or you will move with this trade. But because of the daylight savings, you need to wait for the 1 hour candle to close. So we have like 55, and the trade has already moved. This is a breakout setup. Okay, so as I've been saying, you have a breakout and a break and retest. Okay, so let's analyze gold. So Before that, we need to check the fundamentals too and see what's happening. So kindly give a like to the stream. You are more than 4. Give a like to the stream. Kindly click on the thumbs up button. Give a like to the stream. Click on the thumbs up button and give a like to the stream. Give a like to the stream. Please kindly do that. Give a like to the stream. Give a click on the thumbs up button. Okay, so let's move to today is Friday, so we're having a lot of news events over here. We're having employment change, unemployment rates. So I'm talking about the high impact. But when it comes to the lending session, 6:45 was when we are having the CHF unemployment rate. So the other trade that I was talking about on CHF, the other time that the trade failed on the break and retest, it was this yellow folder. I think it was orange folder trade. Okay, so if you were to go back, you will notice that we had a minor trade setter, a minor news event we didn't pay attention to. Okay, so this was around, it was 8th November. So let's check out on 8th November and see the thing that I'm talking about. So 8th November. 8th November. Okay. So you will notice that we had, so 8 o'clock we had what? CHF news. Okay, so that's why this one even failed. Over here. So we had a support over here. So this was 6 o'clock. Okay, so let's move to the time. So maybe the entry would have been taken on this 6 o'clock candle. So let's check out the 6 o'clock candle and see. If you move back, you can see it over here, 6 o'clock. Yeah, so before 6 o'clock, 8th November, price pulled back. Okay, so this was the time. Yeah, so you notice that we entered the trade around this side, 6 o'clock. Okay, so as price broke out, I entered, not knowing we had a minor news event on CHF which we didn't pay attention to. So that news event made price move down, and later price went in our favor. You get it? So we need to pay attention to, even when like the currency pair that you are trading or the currency you are trading, if there was even a minor news, I think we need to pay attention to. So this year we are going to pay attention to every little thing. Okay, every insignificant little thing we are going to pay attention to. Okay, we are not going to overlook it. We are going to pay critical attention to, because our goal this year is to make money. Our goal this year is to make a lot of money, and the week that we started the stream has started. It has started well. Okay, so I'm hoping it's going to continue. So you just have to always make sure you are polishing. It's all about polishing what we are doing. We are polishing and continue eliminating what's the bad habit. Okay, so this week, what was the bad habit? The bad habit was I wasn't patient to wait for the 7 o'clock candle to close. The what do you call it, the 6 o'clock candle to close. I wasn't patient. That's why you would have even escaped, or you would have even you would have even escaped that loss we took on Monday or Tuesday, forgotten. You would have even escaped it, okay, if you were patient enough. It was around it was close to 4 minutes for the hour candle to close, and we executed. You should have waited for the candle to close before you execute. Well, you executed before time, which led us to that losing trade. So we are during the weekends, because like, listen, trading, for you to be disciplined, you are going to lose a lot of trades before the discipline will start. Let me tell you this thing. When I started, so I didn't start like this. When I started, and when I was starting about waiting for a candle closure, that thing even made me lost a lot of trade. Do you know the reason? Waiting for a candle to close before you execute, I was thinking, like, waiting patiently, you are going to you are going to miss the trade. And sometimes the moment the candle close, like the moment the candle breaks, okay, it will break a major maybe a zone like this. and it hasn't closed yet, I'll execute. And later you can notice that, or you notice that price will wake and come down against me. So even that thing took me a long time for me to adapt with. Oh, okay, you wait, price is not going to move. Even if it moves, you will get another trade. So it all took me some time before I was able to adapt with the concept of what waiting for price to what move before I execute. So everything, being disciplined in trading, you are going to lose money before it will start clicking. Okay, it will start clicking. So I'm not worried, and I know I'm not going to repeat that thing again, since I've noticed that most of the times, like 2 hours, 1 hour, 30 minutes for the main session to start, normally price will pull back before the main session will start. What I'm going to do is what I'm just going to what make sure to be disciplined and be waiting for that thing. You get it? I'm not expecting it to come just a day or a week. It's going to take some time. But with time, as I continue losing, I'll be patient to wait for those setups, those times to come before I'll execute. So trading, being disciplined takes a lot of time. Okay, the more you lose, you realize that, oh, you need to stick to the plan, because at this point you are losing a lot and it is costing you. Okay, so I was going through this thing and I was told, like, it is not about you being disciplined. It is not about you it's not about you having a strategy, and you can have a strategy, but if you are not disciplined, you are still not going to be profitable. If you are having a strategy and you are still not disciplined, you are still not going to be profitable. So you can notice that this one, for instance, as the 6 o'clock candle close, you see the 7 o'clock candle is pulling back, but it's made like it was looking like, oh, it's going to continue massively, that it's not going to pull back. And at this point, you see it is pulling back over here. So it takes time. Okay, it's all about experience. The more you experience, you lose, you come to your senses and you just decide to what to stick to the plan. So the break and retest that I'm talking about, this one happened at the time that you weren't at the looking at the chart. So there was a break, price pullback, created this resistance over here. You see the continuation. So it is similar to the trade we took last week, but that one this week, but this one happened on what, the daily time frame. So you can see the similarities. Okay, you can see the similarities. So the trading is all about time. You need to give it time. Okay, you need to give it time. So let's move straight to the chart for the agenda for the day. So today we are going to be having NFP week, and as I'm saying, having a lot of data. We don't have, so the lending session, we don't have high impact news. So I think if you get a trade opportunity or trade setup, we can execute it without fear of failure. Okay, euro, Chinese. Okay, and 1:30 we are going to be having employment change. By now, if you are new here, employment change simply means what? The number of people employed for last month. Okay, the number of people employed for last month. So comparing this is the data. So this is a red folder. So anytime you see a red folder, you need to what? You need to be stay alert or stay aware of what is about to happen. So this can affect, even though your trade setup can be looking good, your trade setup can be looking extremely good, but yes, still you can still be losing because of what? Because of the red folder. So red folder is mostly unpredictable. Red folders are mostly unpredictable, so it's always important you pay attention to them. So pin this one. Anytime you see a red folder, you have to pin it. Okay, escape it. Don't trade even an hour before the news to be released, because especially if it is USD, or maybe if during the lending session and it is pound or it is euro, you are going to be having a consolidation. You are going to be having slow movement of price before price will start moving. So an hour to the news event, you have to stay away from the chart before. So if you want to trade the news, which I don't recommend or I don't advise, so if you want to trade the news, you will just have to wait when the news, it's either when it is released, maybe 5 minutes, or when you can either be doing the buy stop and stop, which I don't recommend. You get it? Because that one, the guarantee of your profitability is very low. So 1:30 we are going to be having employment change. So the number of people employed to the Canadian economy, or the Canada, or the country called Canada, the number of employed people. So looking at the forecast numbers, 24.9, looking at the previous numbers, 50.5. So the previous number was the actual data that was released last 2 months. Okay, and the forecast one is what analysts are projecting, what traders are projecting, speculating. So they are speculating the numbers to be released is going to be 2.49 based on what history or based on data. They are projecting or speculating that the numbers to be released is going to be 2.24.9, okay, and the previous numbers was 50.5. You get it? So what does, you have to first of all understand the meaning of the employment change. What does it mean? And as I explained, employment change simply means what, the number of people employed, or okay, or the number of jobs, the number of people employed in the what, the economy, the number of jobs or the number of employed people added to the what, the employment sector. Is it employment sector, or the number of people added to what, the labor or the job market, okay, the job market rather, okay. So if a lot of people are added to the job market, what is going to happen, what is going to happen to the currency? That means it is speaking well, or it is talking well to about the economy. Okay, that means productivity is going on well. Production, like jobs are being opening either by the government or by the private sector. Jobs are being opening and other stuff, so it is good for the economy as well, okay, because a lot of people are being employed. They are not burden to the economy, as compared to, unlike maybe African, that they don't pay for unemployment benefit. But when you go to the Western world, they normally pay for what, and unemployment benefit and other incentives to those who are not working. So it is if a lot of people are unemployed, it speaks bad, or it's increased government expenditure. Okay, so if a lot of people are employed, the government, one way or the other, is going to benefit from them. Indirectly is going to take taxes from them. Those people are going to be responsible. They are going to what, to be buying and selling. They are going to be buying, okay, they are going to be buying. So it's going to bring money to the economy, and the economy is going to be what, be active, as in it's going to be moving. GDP too is going to improve. You get it? So it speaks well to the, it speaks well about the economy. Employment change speaks well so if you're having a lot of people being employed in the economy, it is good for the currency and as well as the country too. Okay, so 24.9 comparing to 50.5, that means what, a lot of people that they are expecting low numbers as compared to what, the previous number. The previous numbers was 50.5, which was, I don't know the last that one to what happened, but comparing these numbers to these numbers, that means what, a lot of people as in employment decline, employment data decline, okay. A lot of people wasn't employed as compared, a lot of jobs were not added, okay, as compared to the previous numbers, okay, as compared to the previous, then the previous number is 50, comparing this one. So that means what, the currency is going to be doing bad. It speaks bad about the economy. A lot of people are not going to be investing in such economy. You get it? So it speaks bad about the economy. So employment change, you're expecting the card to be declining, a card to be falling. You get it? And when it comes to unemployment rate too, is the same thing. Unemployment rate, what are they expecting? 6.9, 6. So unemployment rate too has skyrocketed. Okay, unemployment rate too also hike by 6.9. So a lot of people too, they are expecting that a lot of people were not employed, a lot of people were claiming for unemployment benefit. You get it? So you see, it goes in lines with the employment change and unemployment rate. Employment change, a lot of people were not employed. Unemployment change or unemployment rate, a lot of people were not were laid off, or a lot of people were not employed. Employment change, what, a lot of people were not employed too as well. So like the employment change and unemployment rate moves together with this data that has been released. Okay, so we are expecting the Canadian dollar to be weakening when the news is being released. So what you can be doing about this one is what, to have a look at it. It is good to watch, not to trade. It is, so I normally becomes good at trading when I'm watching than executing. Okay, so kindly, when it is time for this news, just analyze, write your predictions down, and see how price is going to play out. If it plays out, that means what, you are on the right track. Okay, you can be confidently to be executing it next time. Okay, see it happening like 5-10 times. Have a data, have a history, have a database. Okay, analyze them. So when it happens, you have a data backing this thing, because you've done it, like you're having 10 trades backing all these things. So you can execute it confidently because you have done it in the past and it has been working. Okay, so that is how we come out with strategy. That is how we come with what a system when it comes to trading. Okay, when it comes to, so watching is when you are going to discover what works for you, and after watching and seeing it playing out a lot of time, playing out more often, then you start executing. You get it? Then you start executing. So let's move to the average hourly earnings. Okay, so this simply means what? This simply means as in how much people are being paid for an hour. Is it high or is it low? Average earnings. Okay, so they are expecting 0.3%, 0.4. So that means what? It has declined. Okay, it has declined, comparing it to the so non-farm play the non-farm employment change simply means the job data, the job added to the US economy. Okay, so it's similar to the employment data. Okay, so this one too, they are expecting 164, comparing it to what? 227. So this one too, there was a decline in what? The job added to the economy, or the employment data, the number of people employed in the economy. So this one too has declined as well. And what? The average hourly earnings too has declined too as well. So we are expecting the dollar too to be also be weak as well. So CAD to be weak, dollar to be weak. So one thing you need to understand is what? This is just a speculation, this is just a prediction. Okay, it is not the actual data, it is not a fact. The fact is the previous numbers. This one has the previous one. So for you to know the fact hasn't been released, the actual data has been be released, the real data hasn't been released yet. This is just speculation from analysts based on the data collected, based on what? Based on their experience. This is what they are predicting. So don't judge or don't conclude on this one to make a decision. Okay, if these data were right, if this, so sometimes it can be right. Okay, most sometimes, and one thing I've noticed, most of the times it happens to be right. Okay, but you are not going to, this not the actual data. If it is right, everyone will be rich. Everyone is going to be executing and be rich. Okay, so this is not the actual data. That's what you have to understand. It's not the actual data, it just says speculation or just a prediction. Okay, so the actual data hasn't been released yet, so it will be released 1:30 and what? 3 p.m. Okay, it used to be 12:30 and 2 p.m. But sorry, it used to be 1. So during 1:30, it's going to be very chaotic. So for me, I've decided this year, after learning session, I'm not going to even trade the New York session, because Fridays are the times that a lot of people don't even trade. A lot of people end their day by Thursday. They don't execute trades on Friday and other stuff. So one thing I've decided is what? Friday during the learning session, after learning session, I'm going to call it a day. And sometimes if I'm already in a winning trade, I'm not even going to bother myself to what? Risk my profit during Friday. You get it? Because Fridays are freaky. You get the Fridays are very, very freaky. So I'm not going to bother myself to even execute during those times. The best times to get winning trades are what? The Tuesday, Monday, Tuesday, Wednesday, Thursday. Fridays are mostly freaky. I'm not saying you don't get right opportunities or right. Sometimes there's right setups. But one thing you need to understand, or one thing you need to bear in mind, is what? Is you can be having a good setup, you can be having a nice trade opportunity. But one thing you need to understand, your technical analysis doesn't move price. Okay, what moves price is what? The forex participants. Those people move price. So the banks and those people move price. So if they are not participating, you have to understand your technical analysis in vain. Your technical analysis is not going to move price. Your lines that you draw on the chart doesn't move price. What moves price is this news events. Those sections are the ones that move price. The market participants are those people that move price. So if they are not participating, no matter how good your trade setup looks like, it is still going to be failing. And one thing I've noticed is that most of the times a lot of traders don't trade on Fridays. So mostly Fridays normally moves like very slow. It doesn't move massively like that. It moves very slow. So I'm just going to be staying out during the New York session on Fridays. I'm not even going to be participating in the forex market as well. So after lending session, when I get a trade opportunity, I execute. After lending session, I'm not even going to bother myself to what? To look for trade opportunity. I'm just going to chill. If I made profit for the week, I'm going to withdraw my profits and use it to chill for the what? For Friday. Have some place, sit, relax, chill, relax my mind, and come again the following week. That's what you need to treat trading. So let's move to the chart and see. So I was talking about gold. So let's see, maybe I think I'm seeing a nice trade opportunity, like a nice range looking left on gold. So today is NFP week. You need to pay. So if you are new to trading, NFP is a major news event. It mostly happens the first week of the month. Okay, the first week of the month, that is when the NFP is being released. So it's a high, or it's an important data. So when it is about to be released, a lot of traders are anticipating it to be moving massively. A lot of people risk their money on those news events and are doing buy stop and sell stop. Okay, so it is a highly anticipated news event. So if you are new to trading, one thing I will recommend, or one thing I will advise you to be doing, is what you stay out or stay away during that time. Okay, stay away during that time. There's going to be a lot of volatility. So simply means there's going to be rapid movements of price. So rapid movements is simply going to be what? Price can be moving up, come down. Price can be moving, come down. Okay, something of this sort. So it's going to be rapid movement in price. Okay, and if your stop loss, it's not a safer side. And even if how safe is your stop loss going to be? Okay, in this market, it's a risky market. So how safe your stop loss is going to be? So you can be stopped out, and the market is going to end. When trading during time like this, if you have a stop loss, the chances that it's going to stop you out is very high. And one advantage about this thing is what, if the market starts moving in your favor, you are going to get a lot of what pips, or you are going to get a lot from the market. That's the advantage part too as well. So a lot of people love trading that time. And I always say, there's no need for me to even gamble my money on that. When it comes to 10 pips, 15 pips, I would have even been getting it in the market like every day. Okay, if it is about 10 pips, 15 pips, I would have even, why should I even follow the hype and be trading NFP? This it's just a hype. Okay, there was nothing in that. It's just a hype on the internet. Nothing is in there. Okay, so let's move to the chart. So when it comes to gold, on the monthly time frame on gold, we're having this rejectional level over here. So you do the top down analysis. So today is Friday, so you try and scrutinize or try to examine the weekly chart, the weekly candle, and see what will be happening to on next week, or where the weekly candle is going to close at. So if you look left, you don't have any data. So anytime you are drawing your support and resistances, you have to look left. And already price has even pulled back. Okay, price has broken out, make a pullback, and it is now moving up. So looking left is going to be at this side. So there's no data, or there's no, as in support or resistances, there's no reactional levels looking left. Okay, if you look your left, there's no reactional level. So moving to the weekly time frame too. So that's all for the monthly time frame. You have identified the various reactional levels. So this is a reactional level. Anytime price will come here, you are going to see an action. So it's either going to break out. So this is how you find the setups. So you either go get a breakout, or it's either going to what? Retest. Simple as ABC. It's either going to break out, it's either going to retest. Simple as ABC. You get it? So the weekly time frame. So on the weekly time frame, if you look at the weekly time frame, see how the weekly candle is going to close, and let's identify the weekly zones and see. Maybe there's going to be chances that next week or within this week, or you are in NFP. So the chances that, so what did we notice about as we analyze the news events? What did we notice over there? We noticed that the dollar is going to be weak, right? Okay, so that means technical analysis. So let's do something. That means technical analysis is aligned with the fundamentals. We expected the US dollar to be what? The US dollar. You expected the US dollar to be weak, right? Based on the information given. So let's do the technical analysis and see whether it's going to align with the fundamentals. So looking at the weekly chart, we are having price moved up. Okay, made a pullback. Price moved up again, made a pullback. pullback. Okay, so you can see this console those time the moment price I see price breaking out, you call it impulse entry. I'll just make an impulse entry because I was thinking I'm going to miss the trade. I wasn't patient to wait for price to what close. So if price has broken out, right, if price has broken out, price hasn't closed yet on the weekly time frame, but this is a higher time frame, so I think it's not a problem. As price has broken out, you can still move to the lower time frames and be fine entry on that or find a setup on that, so it's not a problem. So let's identify the various reactional levels. So you're having a reactional level over here, you get it, you're having at the weekly time frame. So you can see that looking at as in examining or scrutinizing the weekly candle, we can see that the weekly candle, how it formed, it started with the week by what, moving down, and later buyers came in, push price up. You get it, later buyers came in and they push price up. So currently the candle is what, moving up. We are having strong the bulls are dominating this market at this point, because looking at the body, the shaded portion or the body of the what, the candle, comparing it to the wick, you can see that the body of the candle is way big, tall. Any name you can as in use to call this one, you can see that the body of the candle is bigger or taller than what, the wick. Okay, with a lot of volume, a full of what, green candles. So green means what, it means what, the colors doesn't matter, but green it signifies at this point, signifies what, buyers momentum, or what, buyers dominating the market at this point. So you can see buyers are really dominating. So let's try and fix. So you can see this is the key level over here. So if price is moving up, we haven't looking left. Okay, price is currently moving up, price is currently moving up. So looking left, you can see this clean zone over here. Okay, so the chances that the NFP is going to fill this clean zone, so mostly price move, or the price normally moves from range to range. So it is all about demand and supply. Even in our daily life, it's all about demand and what, supply. In every aspect of life, demand and supply works. Okay, so if you have abundance of something, what happens? If you have abundance of something, a lot of people are not even going to be interested in it. People are going to be fed up with. You get it? So abundance normally brings like people get fed up when things are in abundance. So scarcity is the best. So when as in price, there are a lot of what, demand over here, price is going to what, move up. A lot of people demanding because of scarcity, a lot of people demanding maybe a lot of people demanding for maybe gold, or a lot of people demanding for the dollar. What's going to happen is what, price is going to go up because there was a lot of demand for that. A lot of people are demanding for gold, so the prices are going to the hike. You get it? So looking left, we don't have any clean zones over here. Okay, we don't have any supply level, we don't have any resistance level, anything. Okay, so price is going to freely move to the next level. You get it? Price is going to freely move to the next level. So US dollar to be weak at this point, the US dollar to be weak. Okay, so if the US dollar, you're expecting US dollar to be weak, and pairing it with what, the dollar USD, what's going to happen? The dollar USD, what's going to happen? Okay, so that means dollar is going to be strong, that US is going to be what, the dollar sorry, that gold is going to be what, strong, and the dollar is going to be weak at this point. What's going to happen? So we are going to see what, a bullish move. Okay, a bullish move, because this is how it moves. XAU, you have USD. Okay, and at this point we are expecting dollar to be weak, and we're expecting the gold to be what, gold to move up. And one thing you need to understand, on the charts, what you are seeing is for the base currency. So if gold is rising, what are you expecting? You're expecting the dollar to move up at this point. You get it? You're expecting the dollar to move up at this point. So that means technical analysis is aligned with what, the fundamental analysis tool as well. So the dollar to be weak, the gold to also be strong. So this is what the charts, the candles you are seeing is for the base currency. So if the base currency is strong, what are you expecting? You are seeing an uptrend, or you are going to be seeing what, a bullish candles. Okay, to fill this zone. So we are hoping, so you come back and check it again. We are hoping, if it happens that what analysts are speculating or projecting happens to be true, then this zone to be filled for the NFP time. I'm expecting this zone to get filled during the NFP. Okay, so let's move to the lower time frame. So looking at the lower time frame, you can see price has even started moving up. So we're having a rejectional level over here. You can see price has even started moving up. You get me? You can realize or notice that price has already started moving up. So as price has started moving up, so you can see we have a zone over here. Still the zone is clear. Still the zone is clear. When you move to a time frame lower than what the time frame you analyze, you notice that still the zone is what clear. You get it? The zone is clear. So the daily time frame trend, what's the daily time frame trend? The daily time frame trend is what? An uptrend at this point. The market is currently an uptrend at the what? The daily time frame. And with the analysis or with the way I see my market, mostly I'm like a day swing trader. So normally I wait for majority of the high time frame being in line or being in the same direction before I will execute a trade. So since they are in the same direction, or since as in the daily time frame is an uptrend, you have to move towards the other time frame and see if it is in line. You get it? See if it is in line. So the daily time frame is an uptrend. What's the weekly time frame saying? With the weekly time frame, sorry, the H4 time frame, the H4 time frame too is also what? An uptrend. Okay, so you don't need to be told, you don't need any indicator, it's just your eye, naked eye, you'll be able to see prices what, because you're having continuation of what? Higher highs and higher lows without or the lows getting broken. Price is doing continuation of higher highs and higher lows. Okay, there's higher highs and higher lows. So price is currently doing more of higher highs and higher lows. So as we did the analysis at the weekly and the daily time frame, you notice that we had a free range or a free as in traffic or zone over here. You get it? We had a free zone over here. So let's identify our reactional level. So we had a reactional level 2 at this point. We had a reactional level. So price, the chances that price is going to fill this zone is very high. Okay, so you can see how big the range is. Okay, and currently price has broken out. So as I told you, price is either going to break out or make a retest continuation. Okay, but I told you my preferable one, my preferable trade setup, or the one which is dear to my heart is what? The break and retest. You get it? The break and retest is the one that is dear to my heart. So you can see as price broke out over here some time ago, price broke out, it made a retest, and this one I even analyzed it on the stream. What happened? Price continued to this side. You get it? Price continued to this side. I hope you can see it. Yeah, so it's the same thing. And at this point, what you are experiencing over here is what you are experiencing is just what? A retest. Price has broken out. Okay, price has broken out. So as price has broken out, so the best time to take a breakout is what? Breakout entry is when there was volume in the market, and you have to make sure the pair you are trading has a lot of what? Liquidity. If there was no liquidity and you trade breakouts, it's normally going to fail. The break and retest normally works in all the pairs, but when it comes to breakout, it normally fails. Okay, if you are trading it in a pair with a pair on a pair that is not having a lot of liquidity, it normally fails. So price has broken out. So if you want to take a buy, so it's like what happened yesterday. So we had a breakout to yesterday. So there was a breakout over here on gold. There was a breakout over here. So if you want to take a buy, you need to consider where you are going to place your stop loss. So if you are placing your stop loss, you need to make sure you are placing it at a point where there was a strong area of interest. Don't be putting it at anyhow. Stop loss placement is very important. So if you are new here, I always say you are fortunate, because all these things we discovered it by our own money. Okay, we lost money when you were trying to come out with these systems. Okay, so if you are trying to place your, assuming maybe since, okay, this one for instance, if you are taking a buy over here, don't place your stop loss in any level, because one thing you need to understand is what? The higher the time frame, the stronger the level. The lower the time frame, the weaker the level. You get it? So you have to know the difference. The higher the time frame, The higher the time frame, the higher the level. The lower the time frame, the lower weaker the level. You get it. So if you are placing your stop loss, especially on the H1 time frame, on the 30-minute time frame, on the 15-minute time frame, and this one too varies. Okay, this one too varies. So with trading, you need the experience. So you can be using the lower time frame, but you have to make sure there is volume during that time. Okay, there is volume during that time, especially when there's lending open and you are using lower time frame and price has given you a signal or giving you a hand that price is going to continue. If you use lower time frames, the chances that price can go in your favor is very high without stopping you out. But I always recommend you, no matter the volume or no matter how the currency pair or the asset class you are trading is liquid, you have to always use the higher time frame as your stop loss. Okay, without one you are safe, because price can just make a pullback, wick deep. Okay, week deep before it to start moving in your direction. So if you don't want to get worried about stop loss hits, get stop loss hands and other stuffs, use higher time frame. Okay, place your stop loss beneath, or if you are buying, place your stop loss below or beneath what, maybe H4 daily, weekly, monthly levels. If it is what, a sell, place your stop loss above H4 daily, weekly, monthly levels. Okay, with that one, the chances that price is going to stop you out is very low as compared to using the lower time frame like the 15-minute, the 30 minutes. With that one, the chances that price is going to take your stop is very high. Okay, so I always recommend, make sure place your stop loss at a safer side. It's very, very important. So this one, for instance, let's use this scenario for as an example. So this, I said, is a breakout entry. Okay, it's a breakout entry, and we have this room for price to fill at the H4 time frame. I'm not going to be bothered to look at the lower time frames. Okay, this is the time frame I normally make my decision on. So it's around 142 pips. You get it. So if you want to take a buy, and based on our analysis, based on our fundamental analysis, we notice that the dollar too as well is going to be weak today. Okay, if the dollar is going to be weak, then gold, any pair that are going to pair it with the dollar, the pair is going to be strong. Okay, one thing I've also said, the speculation or what we did was not the actual numbers, but based on the technical analysis, we noticed that price has already broken out from the consolidation zone. Because this is a consolidation, you can see the previous candle wick move down, wick move down. Okay, so there was a lot of consolidation over here. So now finally price has broken through. So as price has broken through, if price is moving up, it is free to move to this level. You get it. So if you want to take an entry, don't just place your stop loss below this zone. Okay, so if you want to place your stop loss, you can place it at this structure level. You can see, you can place it at this structure level. You get it. If you place it at this structure level, if price is coming down, it is going to struggle around this level. Okay, it's going to struggle around this level. So what mostly price will do is what, it will just retest it, bounce on this one, then it will take off. That is what mostly price will do. You get it. That is what mostly price will do. And if it happens that it breaks this one, you can see you are still having another rejectional level 2 at this point. That price is also going to struggle, or price is also going to face some challenge before it would also break this one too as well. So we're having a lot of reactional levels, a lot of actions over here that price is going to struggle before it will break through all these things. You get me? Price is going to struggle before. So these are the levels that it is advisable or recommend or admonish everyone to place your stop loss or below these levels. Okay, you are safe. Okay, so trading is like those snipers. You see, the soldiers, when they are shooting, they don't just go and stand in a plain ground and start shooting. You are going to be killed very fast. They shoot, they hide, they shoot, they hide. So the moment you execute over here, make sure you are hiding. Okay, so if price is coming to take you out, it will struggle, because this is a demand level. And if we haven't, so this level simply means there's a demand level. A lot of people, we're having a lot of buyers over here. Okay, a lot of buyers over here. This is a wall, and for price to break this wall, it's going to take a very long time for price to break. Okay, so hide at a point where price is going to struggle, especially not any other time frame, not the lower time frame, because I've already said the lower the time frame, the weaker the level, the higher the time frame, the stronger the level. So if you are placing using the lower time frame, like the 15 minutes, the 5 minutes, it's going to what? It's going to price is going to struggle. Price is easily going to break through. Okay, price is easily going to break through to invalidate or to take you out or stop you out or hunt you. Okay, so always use the higher time frame, because with the higher time frame, the reason is what? Especially when you take the h4 for instance, for you to get a turning point, like this, it takes how long for you to get this turning point? It takes every 4 hour a candle forms, so it's going to take you sometimes a days for you to get this turning point, okay, or some hours for you to get turning point. But with the 5 minutes, it takes like 10 minutes, 15 minutes, you can get a turning point. When you take the daily takes a week for you to get a turning point. Okay, when it comes to the weekly, it takes some months for you to get a turning point. So those time frames are very strong. That's why it's very strong. But when it takes 15 minutes, the 5 minutes, it is easily the 30 minutes, within some hours it's going to invalidate. Okay, so when you get in touch or in contact with even the swing traders, those people, you don't even use the 4 hours. Okay, they normally prefer the daily, the weekly. Okay, because at trading, it's not about the number of trades that you are going to take, it's about the quality of the trades that you are taking. Okay, it's about the quality of the trade. If you get one quality trade and you execute, it is better than you executing a lot of trades and you are in drawdown, depressed, frustrated, things are not working out, wanted to give up. That is going to be a bad idea. Taking a quality trades, if you get one within a week, it is better as compared to what? Taking a lot of trades within at a point or at a day, and you are not getting any insignificant result. You are not getting any significant result from your actions. So it is better you take quality trades. If you get like one or two within a week, it is better as compared to executing a lot of trades and there was no better outcome. Okay, so this is the point you love to what? Place your stop loss. So when it comes to placing your stop loss, you need to make sure, because your stop loss is going to determine your loss size. You get it? So first of all, if you are taking a buy over here, I think this is the recommended. And when it comes to the candle structure too, if candle structure is an uptrend, we don't want the candle to break the previous low. If it breaks the previous low, that means what? Candle structure has been invalidated to an uptrend. Okay, so this too is another confluence. You get it? So a lot of confluences align over here. When you move to the H1 time frame too, we're having what? Pattern structure. So a lot of confirmation over here. So I think your stop loss is safe to place it over here. So how many pips for your stop loss? 65 pips as your stop loss. You get me? 65 pips as your stop loss. So if you are using $100 account, as I always recommend, gold is not for small account users. If you are using $100 account, if you are having $100 in your account, if you are having $100 in your account and you are using your stop loss is what? Your stop loss is 65 pips. You get me or you feel me? Your stop loss is 65 pips and you are using $100 account. So this is going to determine the loss size you are going to use. So you have to, first of all, what you need to ask yourself is what? Your percentage, how much, when it comes to the monitoring terms or when it comes to the risks, how much are you risking or what percentage are you risking? Okay, so the percentage risks or the monitoring risks, percentage risks or the monitoring risks. Okay, the percentage risks or monitoring risks. How much or what percentage are you risking? Okay, so let's say maybe you are risking 2%. So you need to decide these things beforehand. You get it? You need to decide these things before you execute. Okay, decide before you execute on the trade. So 2% on $100 is going to give you what? So who can tell me in the chat box? So chats, who can tell me 2% on $100 is going to be how much? Where is the plus sign? Okay, it's going to be how much? Who can tell me in the chat box? 2% on $100 is going to be how much? So chats, 2% on $100 is going to be how much? I want someone to respond in a chat box. Let me know whether those watching are human beings. 2% is going to be how much? 2% is going to be how much? Can you guys hear me? 2% is going to be how much? On $100 is going to be how much? Okay, so 2% on $100 is going to be $2. You get it? It's going to be $2. It's going to be $2. So with the $2, okay, so that means with this trade, if you are risking 2% on your account, that means you are going to what? You are going to lose $2. Okay, so with $2, you need to ask yourself, what loss size can you use? That's what you need to ask yourself. What loss size can you use? Okay, so after getting the $2, you understand that, oh, okay, so $2. So you are going to multiply your $2, okay, or you are going to multiply your loss size by the risk. That is going to give you the monitoring terms. Okay, that's going to, so you need to ask yourself, what loss size can you use? So if you are using 0.01, you are going to lose like 0.1 cent. Okay, so 0.1 times 0.1, okay, you need to multiply the monitoring term of the loss size times what? The stop loss pips. So 0.1 times 65. So you are going to lose, even if you are using 0.1 cents, okay, using $0.1, 0.01 as your loss size, you are even going to lose what? $6.5. So that means if you are risking 2% on this trade, you can't be executing. So you need to factor all these things into consideration before you execute. So the reason why I'm emphasizing on this thing is what? A lot of people don't understand this concept. You get it? They just execute, they don't understand. So gold is not for small account users. Okay, let's say maybe you are risking like 50, unless maybe you risk big on your account. Let's say you are risking like 20% on your account. So that means 20% on $100 is going to give you what? $20, right? So with the $20, how much are you going to risk? So let's say maybe if you are using like 0.3 loss size, that means the monitoring value is going to be what? Is going to be 0.3 times what? The 0.3 times the stop loss, 65 pips. So you multiply 65 pips, you multiply 65 times 0.3, which is going to give you 19.5. So that means the loss size, if you are risking $20 on the $100, you are going to lose what? You are going to lose 19.5, which is approximately or equal to what? The $20. Okay, which is closer to the $20 you intended to risk. You get it? So it's always important you factor into consideration the risk. If you don't want, so it's all about it's a subjective. Trading is all about subjective. So some people do is what? They find $100, they are willing to what? Lose it within a day. That's fine. There's no need for you to, but you need to, with that one, so you need to understand your leverage you are using and other stuff. Because even if you don't calculate the risks you are risking and other stuff, even if you are willing to lose within a day, sometimes with a pullback, if you don't do your risk management and you just use any other stop loss, your pullback your account can be blown and price hasn't gotten to your stop loss yet. So it is over. Even if you have funded your accounts and even if you have funded your accounts and you've decided to like blow it, you don't care if you lose the day or the following day, you still need to pay attention to what? The risk parameter. Pay attention to the loss size you are using. Other than that, you are going to use a loss size that when price is pulling back, before it will get your stop loss, you are going to be stopped out before price will get your stop loss. So please make sure you are managing risks. It is very important. No matter how the setups looks, risk management is very, very important, and it is always advisable not to risk the whole of your account on one trade. So it is like investment. You don't have to put all your eggs in one basket. Okay, you don't have to put all your eggs in one basket, because it can just, it might happen it's not going to move in your favor. You get it? It might happen it's not going to move in your favor. So you need to do your due diligence, do this calculation. Okay, so this thing I'm doing it because of what those who are new over here. So even though you strongly believe that this trade is going to move to this side, as now price has pulled back, so this trade is going to move to this side. This trade is going to, maybe your stop loss is going to get to this side. This trade is going to move to this side on gold, based on our analysis. So this is just a breakout. If you look left, everything is clean over there. It's the same thing that happened over here. Okay, so now price has pulled back, created this resistance. So you strongly believe that price is going to get to this side. You get it? So moving to the lower time frame, let's see. So price is currently pulling back. Okay, so how can you enter this trade? Price is currently pulled back. So you need to see a signal, a bullish candle signal, before you enter. Moving to the, so if I can say, if this 15-minute candle close bullish, you can go in for a buy. Okay, but if you are going in for a buy, if this one close, if you go in for a buy, you need to make sure you are factoring, or you are considering your risks into consideration. Okay, you need to always consider your risks into consideration, because everything is looking good. If you look at the daily time frame, price is what, an uptrend. You get me? Price is currently an uptrend at the daily time frame. Price is what, making a lot of lower lows and higher highs and higher low. Price is currently an uptrend at what, the daily time frame on gold. There was a clean traffic if you are looking at the daily time frame. So price has a long way to go. So if you move to the H4 time frame to price has what, price is an uptrend. So the daily and H4 are in the same direction. There was a clean zone looking left. Price has broken out from the zone, close. The candle has broken and closed. What are you expecting? You're expecting a continuation to this side. So how can you enter? Price is now pulling back, so you need to wait for confirmation, a bullish candle confirmation. So the closure of this candle, okay, the closure of this candle will take price to this side. So it's either you are going to wait for price, but it's always advisable you wait for the closure for you to get, because now looking at this one, there was no signal. Price is making a bearish. So if you are not fortunate, you are going to get a deep pullback, okay, which can stop you out. So the best way to go by this trade is what, you wait for a bullish candle to close, then you take a buy. Your stop loss is going to be at this side. But as I don't trade gold, I don't execute, so just analysis. So if this one happens to be on currency, I would have executed. Okay, so the stop loss is going to be at this point. And we notice that technical analysis too is aligned with fundamentals, is aligned with technical analysis. So the stop loss is going to be here. You get it? So the price is going to be around, the stop loss is going to be around 26669.757. Okay, so this is going to be the stop loss. Your target is going to be here. But one thing about gold is what, it is going to consolidate for some time. I think it has even taken off. Okay, so the more price move bullish, the more your stop loss widens. Okay, your entry level widens, and price is going to get to this side. You get it? Because everything looks good for this trade to move, for gold to move by. You get it? But I don't trade gold because of the nature of how it moves. And even this week too, I'm okay, so I don't have to risk the profit I've made for the week. I'm just going to relax, wait next week and come back. But if this one happens to be on maybe any other day, which is on maybe Monday, Tuesday, Wednesday, Thursday, I would have executed. And if it is on currencies too, I would have executed. So gold is looking good for a buy, which is going to flip and move up to this side. Okay, which is going to flip and move to this side. So it's going to move to this side. So it's moved during the pre-landing, and now it is pulling back for an entry. You get it? It is now pulling back an entry. So it is going to move. So it's the same thing that happens over here. There was a breakout entry to over here on gold. So it's the same thing that is going to happen today. So it's all about history. Price broke out. What happened? Price continue. The same thing happened on yesterday, price broke out, continue. So the same thing is going to repeat itself. Currently, price is what? An uptrend. You get it? Currently price is what? An uptrend. So the chances that gold is going to move to this side is very high. It's very simple. You get it? It's very simple. So this is having a high chances of what? Moving to the target. It's very simple. Price moved during the pre-lending, but during the lending time it has pulled back for what? For an entry again. You get it? It has pulled back for an entry again. But as I'm saying, you can just, if you want a better confirmation, and you can just wait for this candle to close, giving you a signal that price is going to continue, then you take the continuation. Okay, you take the continuation on gold. Everything is looking perfect good for a buy to this target. Okay, so fundamental analysis, $2 is going to be weak, so gold is going to gain strength today. So it's either they are going to price in the news, okay, the data, it's either going to be priced. So when you talk about pricing, price is going to move the main direction before the main news will happen. Okay, you are going to get a lot of volume, as in price is going to move rapidly before the main as in the main section is going to start. The main news is going to be released, the NFP is going to be released, so we can be seeing some hikes, price moving very fast before the news is going to. That's when we term it as what? Price has the data or the news has been priced in. Okay, the news has been pricing, because as in price is going to move before the major news event. So when it happens like that, we term it as what? Price has already been the news has already been priced in. Okay, so it looks good. This setup looks good for a buy. Okay, it looks good. It's going to fill this range as well. So everything is aligned perfectly. So that's it for gold analysis. So the rest currencies, I think USD card. Yeah, so currencies too are also USD card, the H4 time frame. So currently the daily is, so this is just the pullback that we talked about the other time. Okay, so this was the pullback, but normally I prefer the daily and H4 to be in line. That's what I prefer. Okay, so this year I'm going to execute trades that I have an experience on it. I'm not going to be doing guessing game by executing something that I think my intuitions or my feelings is telling me. I'm going to be executing something that I have a strong conviction, okay, strong belief that price is going to move in my direction, not a guessing game. And the strong conviction or belief, I'm going to get it or drive it or get it from what? My past trades. So this one, the daily time frame is just a correcting, just making a pullback. Okay, so this is what the daily time frame is just doing. But when you move to the H4 time frame, it is moving opposite to what the daily is doing. So I will not, that is why I've not even tempted to even take a trade on, because that's why I've even added some pairs to what I trade, because I want a trade setup that's mostly the daily and H4. That is what gives me a lot of chances of what gives me a lot of a high chances of success, as compared to when one is doing this and I don't normally get a higher, even though you can be focusing on H4 time frame solely and you can be making money. But I want a high 2025. I want a high probability trade setup. No one is pulling a gun on me to execute a trade. No one is pulling a gun on me. No one is forcing me to execute a trade. So I want something that I've seen it happening. Okay, this week I'm okay. I've gotten one trade which runs very well, so I'm okay. Okay, so this one, the daily is downtrend, H4 is an uptrend, so it is inconsistent with the way I trade. So I normally prefer it to be in the same direction. That is when I normally get a big moves moving in my direction. So this one I just stay out. Okay, but the H4 is looking good. So it's the same thing happening on Go too as well. This is just a breakout entry. Price has broken out. Currently pulling back. But one thing about this trade is what price has already moved. So if you are taking a trade on this one, the chances that like your stop loss is going to be very wide, because price has already moved. So what I recommend or advise is maybe you wait for price to pull back. This is H4. Okay, the daily is a downtrend, so this is H4. So as price is pulling back, okay, as price is pulling back, maybe since H1 still is valid, maybe you can wait for price to create a support. But I don't execute on such trade setup. So you just allow price to come to this side, then you take a buy. Okay, then you take a buy for the continuation, because H4 is what, an uptrend. So now the H1 is pulling back, then you take a buy for the continuation. So it's like a break and retest trade setup. You get it? It's like a break and retest trade setup. So something like this. You get it? So it's like a break and retest trade setup. Then you execute. So something of this sort is what maybe I'll be looking up to. Okay, something of this sort is what I'll be looking up to if you want to take, but I will not be taking it because the daily is just a pullback. Okay, the daily is just a pullback, so I will not love to take such trade. Okay, so gold is moving nicely. Gold is still moving up. Yeah, so we have some few seconds for the 15-minute candle to close. So I think if the 15-minute candle close and it breaks the high, you might get price moving. So lending open is okay. So lending is about to open. Yeah, so if it breaks this one, the chances of price moving up is very high. The chances of price moving up is very high. So at this point, any question, but gold is going to move up. Okay, gold is going to move to this target. That's the deal for today. So you scrutinize gold today. And if you are trading on gold, make sure you have a healthy account size, not account size that is weak. Okay, so it has broken, so it will definitely move up. So any question in the chat box? So for me, I'm done for the week. Any question? So any question in the chat box? If you have any question, let me know before I'll call it a day. We come again next week. Any question? So lending is open. So I'm expecting gold to move up. If you have any question, kindly drop it in the chat box. Let's talk about it. Any question in the chat box? So let me check GBP USD. So GBP USD just made a deep pullback. Okay, so this trade was looking very, very good. This trade was really it was looking very good. So moving to the monthly, just made a pullback. Just made a pullback. So moving to the weekly time frame. So price is currently pulling back on this one. So there was a minor rejection over here. Moving to the daily, so you had the daily rejectional level too. So all the time frames are pointing down. All the time frames, higher time frames are pointing down. The daily H4, they're all pointing down. The weekly, they're all pointing down. So there was a perfect trade signal over here, but the zone was very small. Okay, so this was 22 pips. The stop loss would have been 8 pips. Okay, so 1 to 2 trade, it would have been 1 to 2 trade. Okay, it would have been 1 to 2 trades. So price really moved very well. So this is just a break and retest. Price broke out, made a retest, created a resistance, trend continued. Okay, so this is a nice trade setup that happened on gold. A nice trade setup that happened on gold, but it moved during the Tokyo session. It was during the Tokyo session that it moved. So I think if it happens, so today you're expecting the dollar to be weak. So that means, okay, so maybe you can get a reversal or a correction of these big moves that happen. You can be getting a corrective move of this whole move that happened. Okay, maybe you can be having a correcting move of the whole move that happened. Okay, so at this point, if there was no question, I'm just going to call it a day. Okay, I'm going to call it a day if there was no question. So I'm down for the week. I'm down for the week. What's happened? I'm down for the week. So one thing you need to understand is what price doesn't move in a straight line. You get it. A lot of people, especially beginners, when they enter trade and the trade is pulling back, they normally panic and understand. One thing you need to understand: price doesn't move in a straight line. It moves up and down. So if you're in a trade and the trade is pulling back, you don't have to panic. You have to know where your stop loss is. Understand price movement. You get it. Understand price movement. So you need to understand it, and what you execute based on that. Stay in the trade. So what price has invalidated your stop loss. So you need to, it's always important, you need to understand stop loss placement, where you are going to place your logical stop loss. That is very, very important. Okay, understand where you are going to place your stop loss, so that when price is pulling back, you are not going to panic and other stuff. So it's very, very important. Okay, so if there was no question, we are going to call it a day. I hope you have learned a lot in today's stream. I've given out a lot of information on today's stream, which it wouldn't have been. It wouldn't. You will not going to get on any other stream. A lot of information over here. Which you are not going to get. So gold is moving. Gold is moving. But you know one thing I don't like about gold. Sometimes I'm tempted to trade gold. Okay, I'm tempted to trade gold, but the ups and down on gold, you see, currencies mostly, especially if you trade the major currencies, if price is moving in your favor, it just move. But gold will just, that's what I don't like about gold. That's what I don't like about gold. Ooh. Boy. So gold is moving. Gold is moving. So gold is moving. So you see, it's very simple. It's all about experience. You get it? It's all about experience. So it will move even further more. It will move to this side. The risk reward is very good, great on gold. So it's the same thing that happened over here. The same thing happened over here last time. This one too, I was having an eye on this one, but I didn't execute. Okay, I didn't execute because of the nature of gold. It's happened over here too. So gold is moving. So 17 pips so far. So this was the entry point. This was the entry point. We waited for confirmation. So the confirmation was when the candle closed. So it has moved. So guys, what do you think about what's your take on gold? What do you guys think on gold? What do you guys think on gold? What do you people think on gold? Am I? What do you people think on gold? Okay, so if you people are not talking, I'm going to call it. So you come again on Monday. So it's pulling back. You see one thing, it's pulling back, but it will definitely move up. So gold is mostly purposely for scalping. So this one moved like 24 pips. So scalpers with me, I don't like such this thing. It moved like 24 pips. So people would take profits. I want big moves, a trade that will get to my target, not a trade that is going to move up and down. So this one, scalpers would have taken profits by now. Scalpers would have taken profit by now. So because fundamentals are aligned with the technical analysis. So it's definitely going to move up. Okay, guys. See you all next week. Same time. Bye. I have some things to do. So gold has moved like 25 pips. It will like 25 pips, but it will definitely come move up. It will definitely move up. Okay. See you all next week, same time. Please kindly give a like to the stream. Kindly, if you have not subscribed to the channel too, I don't know why you listen to an in-depth market breakdown and you will not subscribe to the channel, and at the same time not share the channel to your colleagues or your friends. So without wasting my time, please kindly subscribe to the channel, give a like to the video, share the link to your colleagues or your friends who are not having the money to pay for mentorship. They can at least be learning this, getting some money before they will enroll on a mentorship. And let me do this thing too. Let me announce this one too. The boot camp is currently ongoing, and we have only 3 slots left. Okay, we have only 3 slots remaining. So if you have not made payment for the boot camp, you see all these things that I did, you are going to get, and you're going to get the baby step explanation when you join the bootcamp, because this one you are not going to get it with the bootcamp. I'm going to break it down in a baby steps so that everyone will understand what I'm talking about. So please kindly contact me if you want to enroll in the 15 days bootcamp that you're about to enroll, and what we take it from there. Okay, have a nice weekend, guys. Make sure you are studying during the weekend. Study. You can go through the live streams that I've done. Rewatch it again. Practice, rewatch, practice, rewatch, practice. And I think it will start making sense. Okay. It will start making sense. So, see you same time next week. Adios. Bye bye.